course, we do begin with our stock of the day, normally a stock that is making news. So it is Centuria Industrial REIT. It is Australia's largest domestic pure play industrial REIT. Its parent, Centuria Capital Group, holding an investor day today. And Centuria Industrial outlining a data centre expansion strategy across multiple Australian sites. The REIT planning developments in Clayton, Thomastown and Toowoomba. It adds that Australia has competitive advantages for the build-up of more data centres, citing a lower cost build compared to North Asia and a strong renewable energy pipeline. In fact, we'll be talking about one of those stocks that may well benefit from that a little later in the show. But let's focus then on Centuria Industrial. Rudi, what are your thoughts? Obviously, data centre growth here. We know what's going on in that demand. How well placed is Centuria?
Well, I think there's a few conclusions to draw here, and that I've been making that point now for a while. The whole AI story is broadening. It moves beyond the companies that we traditionally put in that basket, and it's now going to more and more other companies outside of the circle of Goodman Group, NextDC, and the likes. It's probably very telling. Centuria, of course, is not the only one, but it's probably the first one as a non-traditionally exposed AI REIT. They obviously now, I mean, you see it also with contractors and engineering companies. They're also steering their business towards building out more data centers. I mean, those numbers in the US, they are still going up, and they are still projected to be higher next year than this year, which means that money has to go somewhere. Those data centers have to be built, that money goes into someone's coffers. And what we recently saw with the likes of a Megaport, we're now seeing with Centuria, there's more and more people are looking at that mega trend and thinking like, well, if we can get some of that improves our outlook. In the same respect, I think the market is very quick in jumping on that bandwagon. You see that the share price of Centuria Capital has moved quite a lot recently. Needless to say, this is a longer term story, so those benefits are not going to be for tomorrow. So the market is maybe a little bit too quick, but that's what happens when you're led by narratives. And I think if you look at the market through the same glasses as I do, you see that from the moment AI pops up somewhere, the market is very quick in jumping on it.
Mm. So?
A hold at best.
A hold at best. Actually, just pulling out from there, when you're looking at REITs, is that picture improving, particularly in the prospect perhaps of end of the war, inflationary pressures that are less likely, central banks perhaps maybe a little more less hawkish, shall we say?
Well, if I combine Philip's commentary from earlier and your commentary now, and you look 1 year out, I think it's time to start looking at REITs, yes.
Yeah. Okay.
I think I'd be highly surprised if in 12 months' time, and you and I are sitting here, hopefully, fingers crossed, and we're not talking about when will the next interest rate cut come from the RBA.
Phil, maybe get your take on REITs more generally, but obviously specifically Centuria Industrial.
Yeah, look, I hate to do this, but I kind of agree with Rudi. We should be thinking Centuria Industrial in terms of a REIT and how its clients are currently challenged, because it is operating in the logistics segment. They've been hit by consumer demand, oil price hikes, etc. That is impacting everything exposed to logistics. This too shall pass. We're already seeing the oil price decline. The war will end sometime this year. Calendar 27 is looking more interesting, but we're not there yet. So in terms of what it currently does, it's 16 times PE, 5.5% or thereabouts dividend yield. It's actually not looking too bad. I probably wouldn't rush to buy it. This pivot to data centers, they're kind of late to the party, but that doesn't mean they shouldn't join the party. It kind of reminds me of a number of years ago where every company was jumping over themselves to add .com to their name or to what they do. We're Rudi.com, we're Pepe.com, just to join the bubble that was building. And it kind of feels like maybe that's what they're doing with data centers, that we're going to get more data centers, we're going to need more companies to host data centers. So their strategy isn't wrong, it's just late to the party. And it's in an already highly competitive sector. So there's others who have got materially head start. So I don't know if I'd buy this one just because of their interest in data centers. They've got a pretty good base business that I tend to agree with Rudi. Next year, we're probably talking rate cuts. That doesn't mean you buy a property trust now. I would actually call this a hold. With looking at actually buying in more. I mean, we'll probably get no change from the RBA today. We'll see some mixed inflation data the next 2 quarters because of the fuel excise being removed and then coming back on. But as soon as we start to see interest rates moving down, that is very good for REITs. So this one's on a net tangible asset of 425. It's trading at 436. So it's in fair value. It's not overvalued. It's not really undervalued. Call it fair value based on its current NTA. We should go up with declining rates. So I'll call it a hold for now, with the looking at actually buying more perhaps early next year.
Double hold for our stock of the day, Centuria Industrial REIT.